这个荣主席呢，他非常是有才华的一个教授，他在北京大学创立了一个中国首立的一个法律学院，也给哈佛大学的校长做过一个自传的做全中文的翻译。所以从他的能力、人品和他的所有的规划深得我们的信赖。我们合作很多年了，将来还有一些其他的合作，希望给我们在美国的所有的美国人、华人，给我们后代，给我们国内的人搭上一个很好的桥梁不管是从那个商业中医学还是其他的健康长寿，都给大家带一个好的前途。好，谢谢大家。
Thank you very much, Dr. Zhang. And Dr. Zhang and Chairman Zhang is a representative of our investors. And because we have this campus in 2018, we had a very good opportunity to work with Peter Newman, who is a founder for China European Business School. So he founded the China European Business School in Shanghai and also business school in Europe, Latin America, also Africa. So we had the opportunity to talk to him. He said, maybe it's time for us to start our program. Today is one of the sessions for Global CEO program. Okay, so I just a brief introduction. We will talk more later, but I also want to call Kevin Chen to share his words and his lecture to us tonight.
Okay, thanks Gloria. Thanks everyone for coming. My name is Kevin Chen. I'm based in New York City. I'm honored to join the business school, so I guess lead some of the academic activities. Tonight really we want to first celebrate for the opening of the CEO program and the speaker series of a BIBS in New York City. Several years ago, we actually started planting trees in Boston at the former Northeast University President's House campus. Now it's the BIBS campus. So we're very happy and honored to open the session in New York City as well. And my remark will be brief because I know we have a very long schedule tonight. I'd like to talk about the macro trend in the U.S. Number one, I think I would say the peak uncertainty in the U.S. has passed. I would say the global macro economy, the peak uncertainty was probably 6 months ago when the tariff was announced. The tariff was as high as 150% to China and many other countries. But if you look at the recent situation, the tariff to China declined from 150 to 80 to 60 to 40. Right now it's about 20 to 30%. So it's much more manageable. Yes, perfect. And then, the White House agenda, I would say, has pretty much rolled out all the major change. And then I will talk about asset allocation and opportunities going forward. The U.S. economy right now, I would say, is surprisingly strong. You can see that based on the New York and Atlanta Federal Reserve real GDP data for the third quarter was up 3.8%. And if you add inflation roughly 3%, you end up with almost 7% nominal GDP growth, which is very, very strong, I would say. Surprisingly strong. It's mainly driven because of AI investment. This year, $500 billion in AI investment, energy need, water need, and all the chip manufacturing. And next year, expected $600 billion investment in AI, and the year after, $700 billion. So the U.S. economy right now is very strong, driven by AI. And then if you look at the economic policy in the U.S. right now, First is tariff. The external tariff has increased, but I would say stabilized. There's, I would say, much less policy uncertainty going forward. I met, for example, the traders, the merchants who buy from other countries. They told me that they have diversified their import. They are still buying from China, but also they are buying from Vietnam, from many other countries, much more diversified, and tariff rate has came down pretty substantially. Now it's very manageable for them. Internal is tax cut. The top cut for individuals, corporations, roughly 4 trillion is in progress. And immigration, much less now. And then deregulation is ongoing. If you look at from digital currency to pharmaceutical to antitrust regulation, I would say the 4 major policies, macro policies by the White House has pretty much been rolled out. So no more policy uncertainty. I think it's a very good thing going forward. Inflation has come down substantially if you compare to 3-4 years ago. Now the inflation this year is expected to be 2.3%. Versus 2-3 years ago, so inflation is much lower. Right now, the U.S. inflation is mainly in service sector, like for example, insurance, medical premium, etc. If you look at energy price, food price, inflation is actually going negative even. And then market matrix. If you look at stock market and bond market, I would say is very much a steepening curve. So it shows that inflation expectation is high, but the probability of a recession is falling. So much lower probability of a recession in the next year also. If you recall, 6 months ago, the recession probability was very high. People were expecting some recession, but no more. Dollar itself, US dollar, in fact, this year depreciated 10%, but has stabilized. So dollar depreciation was worrisome earlier this year, depreciated a lot, but now it has pretty much stabilized at the new level. I would say it's another good sign that currency market is much more stable now too. Stock market. You have to say that right now S&P 500, all the performance are concentrated in the AI, artificial intelligence stocks, all the beautiful seven artificial intelligence AI stocks. Apart from AI stocks, most of the other stock market performance have been pretty flat. So not much gain, not much loss. All the gains are driven by stocks like Google and Tesla, etc. And short-term earnings expectations have been revised down. Long-term remains strong. And also, I would say the stock market have been very volatile, but less so now versus Q2. Q2 we had a major swing, but right now you see the market is much more stable as well. And then there's a great rotation of stock market to credit market too. So it's very difficult for private equity to raise money, but much easier for private credit to raise money. I think Mr. John Lin mentioned about when he is building hotels, he borrowed all those credit, but I would say that the equity is very difficult to raise. There's a big major rotation in the US of $1 trillion moving from equity to credit. People are much more risk averse right now versus a couple of years ago. And then going forward, outlook for remaining of this year and 2026, 3 parts. Traditional finance, I would say traditional finance right now is stable. Some default in private credit, but the whole market is, I would say, robust, profitable. And if you look at Warren Buffett, right, he recently published, he's making historical level earnings from his holdings. And then if you look at the digital finance, there's a major growth going on in stablecoin. Yesterday, Circle announced their earnings. You can see that their volume went up 100%. So digital currency is very, very strong now, both in RWA and AI in digital finance. So major growth in digital finance. And the third part is private market. Private market, I would say there's a lot of opportunities. You can think about firms like OpenAI, valuation went to 100 billion. You can think about SpaceX, the company Elon Musk built to send rockets to space, and also a lot of other fintech. So private market right now is very strong. So I would say the three pillars of the investment opportunities, traditional finance, stable, digital market, high growth, and private market, a lot of deals happening. And then I would say, as a quick conclusion, the economy in the US right now is robust, and I would say investment driven by AI. And then the new White House administration's policies seems to favor US stocks over international stocks. The peak uncertainty has passed. So much less uncertainties going forward. And however, the very high interest rate still created opportunities for investors. Right now, the US interest rate is among the highest in developed countries, much higher than Europe or Japan. So it's very good for private credit investors because your interest income is high. And then lastly, the US financial institutions seem to be very stable and profitable. They're well capitalized to handle volatility. So I guess, we don't have a lot of time, right, for Q&A. I will stop here, but feel free to find my name, Kevin Chen, on LinkedIn or Twitter or any other social media. Happy to stay in touch. And congratulations again to Professor Rong for the great success for the launch of the BIBS in New York City. Thank you.
Thank you, Professor Kevin Chen.